Last week, we talked about credit, the amazing power of having credit, and how it launches you from wherever you are, if you don't have it, or if you have very little, into a different stratosphere of being able to afford things that will make your life better. Today, we'll talk about banks. Let me tell you something. Banks are one thing that, if you don't use them properly, they'll really screw you. Big time. Really badly. But first, before I talk about banks, let me talk about what I call the underbanked or the unbanked. There was a 2019 report by the Federal Reserve that I read, and I was shocked. 22% of Americans, 63 million people, 22% of American adults, 63 million people. I got a lot of lights over here. Sometimes I get to sweat a little bit, you know. That's Alex, my Alex and Sargon. They turn on all these lights. I'm not used to all these lights. Anyway, so 22% of American adults, 63 million people are kept unbanked or underbanked. What does unbanked mean? Unbanked mean you don't have a bank account. It means you go to payday loans, check cashing, money orders. You go to pawn stores. Pawn stores. Not PORN, dirty-minded people. PAWN, pawn stores. 17 million people don't have a bank account. They go to payday lenders. They go to check cashing. There's another 46 million people who are underbanked. This is off the 63 million people, right? You take out the 17 that have no bank account. You have the 46 million that are underbanked. 46 million people have no banking, they have a banking relationship, but they still go to payday lenders. Or they still go to pawnshop, or they go to check cashing places. So let me tell you what the cost of these things are, being underbanked or unbanked, right? Do you know when you go to a check casher, you know how much it costs you? I'll give you an example of what a check casher costs. It costs you anywhere between, you go cash a check, right? If it's a payroll check, it costs you about 2.25%, maybe 3%. Maybe if you're a good customer, right? If you're not a good customer, it costs you as much as 6%. If you want to cash your personal check, I write you a check today, and you take it to a payday lender, it could cost you anywhere between 6.5% and 15%. Think about that. If you cash 2 checks a month, each one $2,000, 15%, that's $600 times 12, $7,200 a year, and you don't even know it. The Federal Reserve said $189 billion is lost to pawn shops, not PORN, PAWN, you dirty-minded people, pawn shops, or pawn stores, check cashers, payday lenders, $189 billion. When you take out the numbers and you multiply it by the 63 million people who are using these services, let me tell you what you're losing. This is going to shock you. The title of this thing was, "A Bank Could Be the Worst Investment You Ever Made." Your bank could be the worst investment you ever made. Let me tell you why right now. But first of all, let me define what an investment is. I still see I have a lot of people on Instagram. I'm surprised. Y'all gotta go to YouTube. Go to YouTube because I can see your comments. On Instagram, I'm looking at you. I can't really see your comments. Go to YouTube or Facebook Live on YouTube. We have a lot of people over there. So I still love y'all though. So your bank, the money you put in a bank is an investment. An investment is something, I've defined investments many, many times, but an investment is something, am I frozen? Okay. An investment is something that yields you a return. Some investments give you return every month or every quarter or every year, like a bond investment or like a stock, whether it's interest or dividends. Some give you interest every year, right? Or like rental real estate, right? That's an investment because it gives you interest every year. Some investments don't give you a return until you sell it, like a zero coupon bond. I won't explain that now, but it's an investment where you don't get paid until the end. Or like Bitcoin. There's no interest, there's no dividend, like gold. You're relying on that investment to grow. It's kind of hot. Could we turn up the AC a little bit? Turn it, it's a little hot over here. I'm sweating over here. They're making me sweat over here, probably on purpose. That's Sargon and Alex. Anyway, so an investment is anything where you expect to yield a return. Well, when you put money in the bank, you're not giving the bank for free, right? The bank takes your money and they invest it. They give loans to people. They make money on your money. So why wouldn't you require your bank to give you a certain degree of interest? Of course they should, and they do, if you ask right, or if you go with the right bank. So by default, when you put money in a bank, money that they're going to use to make money on your money, you should be requiring your bank to give you a return on your investment in the form of interest. So by default, our definition of an investment, something that gives you a return, applies also to your bank. So if your bank is an investment, which we agree on, for many people, your bank is going to be the worst investment you ever made. Let me tell you why. The Federal Reserve said 63 million people are either underbanked or unbanked. That's our denominator. The Federal Reserve in the 2019 report, I can send it to you if you email me or just Google it, Federal Reserve 2019 report, also said 189 billion people, $189 billion are lost. These 63 million people are losing 189 billion per year. Divide those numbers into themselves. Gives you $3,000. That's what every single person on average is losing by using a check cashing place or going to a payday lender or going to a pawn store. PAWN, y'all. $3,000 a year. Do you know what that comes up to? If you took that $3,000 a year and invested it in your IRA, paying no taxes, or your Roth IRA, even better still, if you're younger and you're 30 years old, and you're going to invest that $3,000 a year, which you're losing to payday lenders, in your own account, in your Roth IRA or any other tax deferred account for the next 35 years until you're 65 years old, do you know how much you would have made? At 65, do you know how much you would make? $708,000. Let me repeat those numbers. The average person by the Federal Reserve loses about $3,000 a year. The average person who uses these services, the unbanked and the underbanked, $3,000. That's how much they lose a year. If I take that $3,000 and I invest that money in a Roth IRA that's yielding me 10% rate of interest per year in the stock market, I would have, after 35 years, $708,000. Nobody's telling people this. Well, I am. So, why do people decide to be underbanked? Why do people decide to be underbanked? Or why are they underbanked or unbanked? There's a couple of different reasons, right? Or before we talk about that, let's talk about who the underbanked are anyway. Who are these people who are not able to get access to banks? It's the same old story. Low income people. The people who we just talked about, who the government just gave the $1.9 trillion bill is helping, those same people. You know how much? 15% of households making less than $40,000 are unbanked. 15% of people making less than 40,000 are unbanked. 15%. 3% of those making over $40,000 are unbanked. Look at the difference. If you make under 40,000, you're probably underbanked or unbanked. If you make over 40,000, you're probably banked. Sad. Less education. The second reason, what happened to our Instagram friends over here? We're good? Okay. Less education. What happened with the people who don't have an education are the ones who have less of an education are the ones who are getting hurt. Those with college degrees and higher education are a lot more likely to have bank accounts. Racial minorities, black people, Hispanic people, Native Americans, we don't have bank accounts. We don't have bank accounts. Lower credit scores. People with lower credit scores. I spoke about credit scores last week. There are so many people who don't have credit scores, so they use these prepaid credit cards. These prepaid cards. These prepaid cards are expensive. They have activation fees. They have not just activation fees. They also have fees for when you swipe, you pay a fee. They have monthly fees. There's a lot of fees you're paying. People with low credit scores because they can't get a credit card. They should be using a credit card instead of a prepaid card. So what's the problem? Why are so many people unbanked and underbanked? I'm just curious. Why are so many people underbanked? The same Federal Reserve, as reported by Forbes, and I read the report, said the following. 53% of households said, you know what? I don't have enough money to open up a bank account. Are you serious? A bank has so many benefits. A bank has problems, and we'll show you how to weed through those problems. We show you how to cut through all the issues banks have. Pick the best banks for you. But banks have some amazing benefits. Number one, they allow you to do direct deposit. Two, they allow you to do transfers from bank to bank. Number three, they allow you to get all kinds of other services. Banks have a lot of services that you should be utilizing when you pick the right bank. But a lot of people said they don't bank with banks because they don't believe they can afford. They have enough money to put in the bank. Their bank's offering you zero minimum, $10, $5, $17. You can open a bank account. Lack of trust. 53% of people, by the way, said households said they don't believe they can afford to put money in a bank. 30% of people said a lack of trust, that they just don't trust the banks. After 2008, 2009, it's a big deal. 2008, 2009, a lot of banks were in trouble. Countrywide failed. Bank of America failed, or before it was bought by Merrill Lynch. Bear Stearns, so many banks were failing, so people got scared. We're going to talk about this, how to allay your fears, make you feel better. But 30% of people said lack of trust. 53% of people said they don't have enough money. 30% of people said lack of trust. Fear of fees. People are afraid of the fees. They're afraid of overdraft fees, ATM fees, monthly minimum service fees, cashier's check, so many fees with banks. So out of fear of paying this fee, they go pay this fee with a check cashing place. Sad. Anyway, there's more problems. There's more reasons why, right? Some people don't have credit. We talked about that. So they use the prepaid credit. Some people get on this thing called a digital blacklist. If you know what a digital blacklist is, if you bounce a check once too often, or if you go into overdraft once too often, the banks will put you on a blacklist. Did you know that? It's a blacklist. And so it's very, very important for you to not get on that list. If you're on that list, I'll show you how. So if you ever try to open up a bank account and you couldn't open it, they said, yeah, well, I'll show you how to get on that, how to get yourself off that blacklist. I'll show you how to identify the blacklist, and hopefully you can get yourself off of it. So, banks. Let's talk about some of these fees, right, that these banks charge. Let's talk about the size, just so you get an idea, because we just talked about how people in many ways get screwed by money lenders and by payday lenders and by all those other people, right? People literally get screwed. We're going to talk also about, does that mean, well, if you don't do money lenders, and somebody asked me this question on social media, If I don't do money lenders and I don't do check cashing and I don't do payday lenders, do I do banks or do I not do banks? But you said banks are bad. Well, I didn't say banks are bad. I said the wrong bank could cost you a fortune, $708,000. But let me tell you first, before I tell you about how to pick a bank, let me tell you, we just talked about payday lending. Let's talk about banks. Let's talk about how much banks charge. Banks charge an insane amount of money. Insane. Overdraft fees. You know how you deposit that $50 check and you don't realize you had that $50, you didn't have that $50 because another check, was cashed ahead of that. And now you got to pay that $32. It makes you mad. You deposited $40 or $50, you have to pay $32. Banks make $30 billion a year in overdraft fees. Do you know that? It costs the average person $33.47 a year per transaction. You're paying about $33.47 every time you have overdraft, every time you do that overdraft. If you don't cover it with something else. Monthly service fees. You know how the banks would just charge you that $10 or that $8 or that $15 monthly service fee? $35 billion is lost in America to monthly service fees. You know what that means? Each American is paying an average of $107 per year. That's $107. That's milk money for Junior. That's babysitter money. That's money for gas. $107 is what you're paying in monthly service fees. ATM fees. Hallelujah. I hate those damn fees. Excuse my French. The average person pays $4.64 for ATM fees. A bank will normally charge you between $1.50 and $3.50, right? $1.50 to $3.50 to non-customers. But you go to those non-bank 7-Eleven, casinos, for those of you who gamble, you know what I'm talking about. You go to you're out of money, you finish, $500, you go to the casino, you want to pull out some money. A non-bank, they'll charge you almost as much as $10. We're losing so much money through ATM fees. Money transfer fees. You ever try to transfer money? Not Venmo or Cash App. Through your bank, using a wire or some other method, direct transfer, as much as $10 to $35. That's how much banks are charging. They're making a fortune on your back. We're going to change that today. Now, it's one thing if they're charging you a lot of money and they're giving you interest, right? Because the banks are using your money, right? They use your money to loan. They loan your money out to other people so they can charge interest. Do you know how much banks are paying you now on average? 0.04%. That's all you're earning. 0.04%. 0.04%. I gave you an exercise, yes, last week. Did you do, hi Melva, did you do your homework? Mango Platinum asked a question. We'll take a little break to ask a question. Mango Platinum is asking, where do you keep your money if banks are bad? Some banks are terrible, but some banks are actually pretty good. So you should keep your money in a bank, just not any bank. And I'm going to show you those banks I like, and I'm going to show you how to pick a bank for you that works for you. So good question, though, Mango Platinum. So let's see. I asked you to go to your bank, go online, or call your bank and ask them what interest rate they're paying you. And I asked you to go to bankrate.com and compare interest rates. Now, who did the homework? You're welcome, Melva. Hi, Shaz. Hi, Off Beauty Naturals. Who did the homework? You remember, to motivate me, you have to do the homework. When I give you homework, you have to do it. That way I'll come back motivated because I know you're working as well as I work. I do a lot of work on these things. So, who checked their interest rate their bank is paying versus bankrate.com and the difference? I want to know what the difference is. Anyone? Are y'all calling your bank now? It's too late. You should have done the homework before. Kimberly, you didn't forget. Oh, you forgot. Okay, well, my bank pays, Melva said my bank pays 0.02%. That's bad. That's half of the average. The average is 0.04%. Did you check bankrate.com, Melva? Because if you check bankrate.com, you'll find out that Last week, there was a bank called Axos Bank giving you 1.25%. They went away now. I don't know where they are. You have to go to their website now to get that money. I guess they maybe I drove too many people to them or something. Maybe they decided we can't deal with this volume. Now there's banks giving you 0.6%, more than 10 times, almost as much as 15 times more than your bank is paying. For you, member, that's almost 20 times. Yes, yellow. The highest rate you saw is 0.6%. That's correct. Do you know what it is? The difference between 0.04% and 0.6% over the next, say 30, 35 years, $4,649. So if you go with your bank that's paying you 0.04%, meanwhile, all you needed to do is just move your money to a bank that pays you better interest, 0.6%. You know how much? Almost $4,700 is what you'd be saving. So I've told you a lot. I've given you a lot of problems. I've told you some banks are great, some banks are not good. Payday lenders are terrible. Check cashing places are not good to go to. But where's the right place? When I say terrible, I don't mean they perform a service, but it's a service that you don't need. What's the solution to the problem? How do we solve this problem? It's a really big problem. So many people lack credit, which I talked about yesterday. And as a result, they're locked out of the banks. And as a result, they're paying as much as $3,000 a year, which is costing these people up to $704,000. $704,000 is the cost to some people over a lifetime. Money that should be going towards retirement or juniors' tuition fees or buying that new car or you're buying a home, paying down your student loans. What's the solution to the problem? The first, you got to completely avoid check cashers, pawn shops, payday lenders. Look, in my industry, I'm a financial advisor. I'm licensed, right? And I give advice. So one of the disclaimers I do have to give you is that each person's situation is different, right? I could tell you something is terrible, but it may be good, okay for you because of your circumstance. So please do your own research, do your own analysis. These things are, I'm saying, because I can't, as a financial advisor, we do one-on-one work. We work with people one-on-one. We sit down with them, we analyze their financial situation, we help them. Since I can't do that with you right now, I can tell you general stuff. You go do your own homework. The first thing, however, that you want to do is completely avoid check cashers, payday lenders, pawn shops, anybody else who's an alternative financial system that's sucking your lifeblood, money that you need. Those guys are not going to like me after this, but hey, I don't care. My job is to help the 99%. So, what you need to do in response to Mango Platinum's question, wait, somebody asked me a question. Sharon said, where does the bank fees go? I just told you those banks make all these profits and all this money and then they charge all these fees. You know where these fees goes? Shareholders. And to pay executives millions of dollars in bonuses. I used to be an investment banker. I worked on Wall Street for several years right after Harvard Business School. I made a lot of money as an investment banker. Some of these top executives make millions and they pay shareholders huge dividends. Banks are known to pay a lot of dividends, right? So we do this thing called dividend analysis for companies. Banks pay a lot of dividends. Look, if you're with a bank that's not paying you interest, you better own the bank or at least own some of the stock of the bank. Why? Because they're taking money from the depositor and giving it to the shareholder. So please own the bank. Go own the bank. If you're not making interest first of all, switch from the bank. If you can't switch or you're too comfortable, the bank gives you too many services, or you have all your whole life tied into that bank, mortgage loans, car loans, interest rate, credit card, buy the shares of the bank. Why? Well, because you're transferring money from the depositor to the to the shareholders. So the solution is to pick a bank that suits you. First of all, let's talk about the services of a bank. What does a bank do for you? And why should you stay away from money lenders and payday lenders and check cashing places and pawn shops and all those places, right? Bank gives you online bill pay. You can pay your bills online. You don't have to go to 7-Eleven to pay your bills, right? Automatic transfers. You can transfer money from one account to another. It's easy. It's simple. You can mobile check cashing, mobile check deposit. So when you get your check, instead of going to a check casher, I'm paying $4 or $8 at Walmart, or paying 2.99% or 3.99% or 15%. You can deposit it for free. Hopefully, with some of these banks I'm going to teach you. So banks offer you a lot. In addition, many of these services, alternative financial services like pawn shops and payday lenders, they require you to go in, right? You have to go in. You have to be there physically. So it takes up your time. Why not be at home and transact all the business you need on your computer? In addition, you may be comfortable without a bank by holding on to cash, but you're at risk of being robbed. Theft is an issue. Keeping all that money at home on your wallet. What if you get robbed? So there's many advantages to being with a bank. But first, we have to deal with the issues that people have with banks. So the first thing I'm going to teach you about is your money is safe in a bank. People don't trust banks. Since 2008, 2009, people feel these banks, they could go under, my money's in there, the bank could fail. It could, but I tell you who's not going to fail. The US government. And the US government has this amazing thing called FDIC insurance. Yes. Since 1933, FDIC insurance has been there. It helps guarantee your deposit up to $250,000 for one person. But if you have a family or you have a joint account, up to $500,000. There's different levels for trusts and corporations and so on and so forth, but you get to protect up to $250,000 and up to $500,000 if it's a joint account. Well, if your bank goes under, the US government that funds the FDIC, well, actually it's funded by the member banks, but the US guarantees it. The US government will give you your money back. So the bank is safe. Plus, they don't keep that cash in the bank. The bank has a bunch of computers. The cash is just a bunch of computers. So don't worry about your cash disappearing if the bank fails, right? In the bank is just a computer system with ones and zeros. So first thing you need to do is recognize that your money is safe in a bank up to $250,000. If you have more than that, congratulations. Multiple bank accounts. Set up different banks. Go to one bank, put 250, another bank too. You can do this all online. So, what do you look for in a bank? What are the step-by-step things that you should look for before signing up for a bank? Fees, no fees. No monthly service fees, no monthly minimum fees, no limit on transactions, no ATM fees. You don't want to pay any fees. Those fees are costing you tens of thousands of dollars per year. No monthly service, no ATM, no transfer fee. Try to avoid fees. I'll show you how to do that. Interest. You want a bank that gives you sizable interest, high interest. We like interest. We like interest a lot because it's money in our pockets we didn't work for. Passive income, sleep money. I like sleep money because I don't have to work for it. We work 8 hours a day. Well, I work about 18 hours a day, but average people work 8, 9 hours a day, maybe 10 hours a day. How about the other 16 hours? You got to make money the other 16 hours you sleep. That's sleep money. That's your bank account. It's working for you. So pick a bank that gives you high interest. I'll show you how to do that. Online service. You got to get a bank that has great online service. Otherwise, you're going to be doing, especially with coronavirus, a lot of your transactions are going to be online. Pick a bank that has a great, strong online presence, good customer service. Availability of other products. You want a bank that maybe is not just able to offer you a good checking account or savings account. You also want a bank that'll offer you potentially a money market account. It's not FDIC insured, but gives you a higher interest rate. A bank that may give you a credit card if you don't already have a credit card or a better interest rate on credit cards. A bank that'll give you a loan, maybe a auto loan, home loan, business loan. Also, you want a bank that, some banks have not just consumer for mom and pop, but they also have business bank accounts, right? So some banks, if you're a business owner, a hairstylist, or a real estate agent, independent real estate agent, you want a business bank account that has certain features. For example, your CPA can actually get access to it. So you don't always have to send those statements at the end of the month or the end of the year. So there's different services your business bank gives you. So those are the traits or the qualities you want to look for in a bank, right? There may be other things like ATMs. I don't go to the bank ATMs a lot. I do sometimes, and those are personal choices. But there's some banks out there that give you the choice of almost any ATM, no fee. I'm going to show you those banks. So now that I've shown you the type of things you want to look for in a bank, depending on where you are, here's where you start to not be one of the unbanked or underbanked any longer. Number one, first of all, let's make sure you're not on the blacklist. Remember I told you before that there was this thing called the bank blacklist? Look, I'm in the industry. I understand it. Many people don't know. You bounce a check once too often, or you do overdrafts once too often, they put you on a blacklist. Do you know how to check? The first thing you want to do is go check. See if your name is on the blacklist. It's called www.checksystems.com. www.checksystems.com. Check Systems spelled CHEXSYSTEMS.com. Checksystems.com. Or call 800-428-9623. Make sure to check because you got to get yourself off that blacklist. Next, when you pick a bank, and I'm going to show you now some of the banks that I like. But actually, before I do that, let me give you a few other tips. I've told you how to pick a bank. I've told you the things you want to look for in picking a bank. I've told you some of the ways to check, one way to check to make sure you're not on the bank blacklist. The few other things that you may want to do to make sure that you don't run into these problems the underbanked or the unbanked run into. And that's why the underbanked or unbanked. Set online alerts. I can't live without online alerts. I got multiple bank accounts. I get all alerts all the time. It's the most valuable thing I ever did. One of my colleagues, Ben Kim, he works with me. He used to work with one of the big four banks before. And he worked with me to say, you know what, David, I've been saved multiple times by my banking alerts. He said there was a time when I was paying off my student loans. And the bank, the student loan company charged 2 payments in one day. And if I hadn't checked, if I didn't have online banking alerts, I wouldn't know. And you know what would have happened? My check would have bounced. The next few checks would have bounced. I would have paid not just huge overdraft fees, but also I would have been on the blacklist. Set online alerts. It's very, very easy. Once you start a bank, and I'll show you the banks I like. Once you pick a bank with no or low fees that gives you a significant amount of interest, that has online presence, that has the ATMs that you need or not, make sure to go to that bank and set online alerts. Anytime I check is cash, it doesn't matter how small, $1, I need to know. If you take any money out of my bank account, I know right away. It's also a good security protocol. Number 2, opt out of overdraft. You don't want overdraft, man. Those things, $35, $25, $18, $40. They charge you an arm and a leg for bouncing a $10 check. You could pay as much as $35. We don't want that. Set overdraft, no overdraft, right? Build an emergency fund. We're going to talk about this next week. The reason why most people are underbanked There's a bunch of different reasons, but one of the key reasons is because they don't have an emergency fund. The average payday loan is $375. The average payday loan is $375. What if you had $375 in the bank saved? You wouldn't need to pay that humongous fee to go to that walk, leave your house, drive to the payday lender, stand in line, get that check. You wouldn't have to get that $375. And then you got to pay back with your paycheck. And you got to pay that enormous amount of interest rate. If you build an emergency fund, you would never have to do that again. Hopefully. I'm going to teach you how to build an emergency fund next week. But it's important for you to start today. Let me give you a few tips. Tax season is here. You're going to get a tax refund. You're going to get $1,400 in stimulus check. Get $300 a month for your kid. Some of that should be your emergency fund. I'm going to show you ways to do it. A small percentage of your paycheck should go to an emergency fund. So, those are the ways you can pick a bank that's right for you. Now, I'm not going to stop there. I didn't stop there. I actually did some research for you. Me and my team. We looked at some banks that we like, and there's two. Now, because of what I do for a living, I can't recommend banks. I can't recommend stuff. Nobody pays me anything. I don't, I don't accept endorsements. This is a show for the people. Once you start accepting endorsements, you're catering to different interest groups. So we don't do endorsements here. We do, straight. We tell it like it is, real. We tell the real deal. Okay. So we did some research and we picked two banks that fit almost every criteria that we have. One is called Chime. You've heard about it, the fintech company. It's an online bank. You know what I like about them? No overdraft fees, no minimum fees, no minimum account fees, no monthly service fees, no foreign transaction fees. They have 38,000 no fee ATMs. You can use up to 38,000 ATMs, right? Here's one part I love. They don't charge you on overdrafts over under $100. If your check is your bank account is overdrawn up to $100, they don't charge you. How wonderful is that? I love that. Now, this bank has 8 million customers. They don't pay me anything. But sometimes you got to tell it the way it is. It's an online bank. You can join. You can go start, your bank account tomorrow. No fees. Save your $3,000. There's another bank I like. It's called Axos Bank. AXOS. Axos Bank. That bank pays you, go to their website, up to 1.25% interest. Now you got to jump through a few things, but up to 1 point, they were the one I saw last week on bankrate.com that I mentioned. They're off bankrate.com now. Maybe they want you to go to their website to do. Maybe too many people. Maybe I drove too many people there because I told people about it. Go get your 1.25%. Melva just told me that she earned 0.02%. I just showed her a way to earn 1.25%. And there's no maintenance fees, no overdraft fees, no minimum balance fees. And they have a kids checking account for 13-year-old to 17-year-old. It pays 0.25%. Get your kids started. Unlimited ATM reimbursements, which means you can use almost any ATM. They'll give you your money back. Ladies and gentlemen, it's important for us to do certain things to lift ourselves out of the 99%. You don't have to be there. You don't have to stay there. Because you've been put there by birth or by virtue of life, you don't have to stay there. You can raise yourself. There's two things I just taught you how. Last week, how to get better credit. I hope you've been working on your credit. Doesn't matter how good it is. Work harder to make it even better. I just showed you how to become one of the banked. Stop paying that $3,000 per year. That's over $700,000. What would you do with $700,000 at retirement? This is wealth demystified, my friends. Okay. I think we're going to stop here. I really appreciate you all being here. It's almost an hour. We're trying to keep this show at 30 minutes, but I like to talk. I like to use examples. I like to share ideas. And I love the interaction that I have with you. I'm going to stop here. Next week, how to start an emergency fund, how to grow your emergency fund, how to keep an emergency fund, strategies for your emergency fund. These are the basic build. Before I start teaching you about investments and buying real estate and buying stocks, you got to first build the foundation. These are the things that I'm teaching you. God bless. See you next week.